What's the best way to trade an order block? Well, high probability order blocks are formed after 1, a liquidity sweep, or 2, leaving a fair value gap. Let's go over liquidity sweeps first. So to identify an order block, it's the last up/down closing candle before a liquidity grab. If you're not sure what these are, make sure to check out the previous videos that I've made, as I've gone through them thoroughly. When we sweep liquidity at the lows, there's a chance that a high probability order block can be formed. So to spot this, it is the last down closing candle before the move. Created some steps here for you. We've got 1, where's liquidity been swept? Liquidity was swept here, so we can take that off. What's the last down closing candle? Well, before the move, we've got 2 down closing candles here. As we've got 2 consecutive down closing candles, we're going to use this as one order block. Reason being, on a larger time frame, it would just be one order block. So this is where your area of support would start for your move, and your stop loss can be below the low. Now that we've ticked these 2 steps off, we have to ask ourselves, have we closed above the open? So this is the open. You're not going to use this one as you're using both, so you're starting at the highest one. This candle here has closed above the open, so now this order block is validated. Some people wait till we take out the fractal high, but if you know what you're doing, you can start from here. Now that we've marked that out, I can expect price to return to this order block, area of support, and reach for these highs. So we've been tagged in here, left couple fair value gaps, and that would have been your take profit. Now for a bearish example, it's going to be quite similar, but the definition changes a bit. So instead of looking at the last down closing candle, we're looking for the last up closing candle. And we're asking ourselves, have we closed below the open? So can you spot where liquidity has been swept? We swept liquidity right here, so we can take that off. Question number 2, what's the last up closing candle? So again, we've got 2 consecutive up closing candles, which if we close below, we can use as an area of resistance. The reason why I use the bottom of the wick in this example is because the wick is very long, which can be subjective. But when the wick is very short, like this one, price tends to return to the body and displace below. So now we can tick off question 1 and step number 2. As we've identified the last up closing candle, have we closed below the open? Yes, we did that here. So now the order block is validated within this candle. So my entry can be here, and my take profit can be for these lows. We've been tagged in here. We've left a fair value gap. And that would have been your 2-hour trade. Now let's move on to part 2 of the video. Spotting bullish order blocks after leaving a fair value gap. So we've got our steps here. Where's the fair value gap? We've got one here. We've had price moving into the bullish fair value gap, and the body's respecting it, so we can tick that off. What's the last down closing candle? Again, we've got consecutive down closing candles, so we can use both of these. Have we closed above the open? So the open is here. Now that we've drawn that out in time, let's see if we close above it. So we closed above here. Now the order block is validated. And my entry would be here. And my stop loss will be below the low. And you can see price has just swerved us there. So it's not always going to be perfect. Again, it is a probability game, but I just wanted to show you a really good example. Finally, for our bearish order block formed after leaving a fair value gap, similar steps again. Where's the fair value gap? We've marked it out here, so we can take that off. Step number 2, what's the last up closing candle? So we've entered the fair value gap here, body's respecting. We've got 2 bullish candles here, so now we can tick that off. Have we closed below the open? The open starts here. It's not a very long wick in my opinion, so I'm going to be using the body. So my entry would be here, my stop loss above the high, and my take profit is going to be aiming for these lows here. We've been tagged in here, and we've displaced down really quickly. So thank you for watching this video. Again, if you have any questions, feel free to comment down below. And if you're interested in anything further, feel free to click the links in the description down below.